Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the week ahead. Your guys are right. You're absolutely right. I'm looking at the live chat. The big news really is the Japanese yen and what happened over the weekend. It's a fantastic illustration of why holding any type of position through Friday's close to Monday's open is definitely problematic, and it can definitely challenge your trading account, and you can get overextended very, very quickly because these moves, they oftentimes come out of nowhere. And we had an idea that there was going to be a change in the political garb in Japan. Didn't really know much about it, honestly. It was sort of a peripheral story compared to the U.S. government shutdown, which is, it's rolling on to its fifth day. We got a vote coming later today. We're expecting this thing to be rectified relatively quickly before Friday's NFP drop. We got to talk a little bit about that. But really, the big story is the Japanese yen. So let's get right out to price action here real quick and take a good look at this this daily chart. And then, guys, this is why every Friday, really for the last 4 years, just about 4 years that I've been on these live streams, I said, listen, if you carry something over the weekend, you have to be prepared to either reap the rewards or reap the consequences. These folks that went home short on the dollar yen had no chance to get out of it. You had no chance to get out of it. You took this into a market closure. The market gaps higher on you, and that is just damage. I mean, you don't even have any chance to get out because nobody's really making a market right in here. Now, I'm going to talk about gaps in a second, but what happened when we went off the board? Let's say you went home short the Japanese yen. And I always look at the worst case scenarios first. Always. And then we'll talk about what happens if you went home long. But if you went home short right from the close, 147.49, and then where do you open? Where do you open today at? Your open is 149.41. You don't even have a chance to get out. You don't even have a chance to get out of the market. And I beat on these things, and I get on my soapbox and I preach because not many people have enough money to ride that out. Now, if you were short, and there was reasons to be short. We talked about the yen a lot last week. Right now, what do you want to be long? Do you want to be short? What does it mean? I always come back to key numbers, and most people don't want to hear it. They're tired of hearing it, but I'm telling you what, believe it. 150, that's the one that's up for debate right now. You can see this double top that came across the board in late September, and you had a few trading days there in October, and then the big gap up. Where does price go when everything goes crazy? Goes to key numbers. So where do you think they started making a market today? Right in that 150 area. Right in that 150 area. Look what your open was, 149.41. Money came in, bid that thing to 150, and now we're getting compressed. We had a high up there at about 150.47, and now what are we trading right now? Right around 150.16, 150. So when all else fails in the market, when things get crazy, and you see incredible technical events and big time volatility, and all the things that really shock us as traders, understand that key levels are the basis of price discovery. They really are. It doesn't really matter what either one of, if I'm a buyer or a seller, it doesn't matter what either one of us think about the dollar yen at 148.25, 148.32. No one cares. But what do you think about it at 150? That's how the institutions work. That's how they have auctions. Believe me, I've watched enough cattle auctions in my life. We go down there and you watch them start auctioning off steers and pairs, and it always just goes up to round numbers. And that's just the way that auctions work. Understand when you're in front of a screen, you're participating in an auction. Now, it's a complex auction, and it's always moving, and it never really closes auction. But that type of environment right there can be very difficult for you to trade successfully. Now, very quickly, is this a gap? No. It's a gap up, of course. It's a gap up because our price on the open is different from a price on Friday's close. Do I consider this a gap? No, I don't. I'm looking for gaps that are at least 30 to 60 to 90 days old. I like 60 in stocks, but 30 in the Forex, 30 in commodities. That's pretty good. If you take a look at this gap area, right here, we traded this last week. So I'm not really too concerned about this area not being debated. We already really pretty much know that. As far as how I would be trading it, if there was no price action here and this gap went all the way back, let's say we went all the way back in a couple of months, then I would tell you the rule about gaps. There's 3 rules for gap trading. Gaps get filled, and gaps get filled. That is the basic constant of price discovery. You have an asset. You have a bunch of price points. You have buyers and sellers. Typically, all the price points are debated before you move to a new value area and decide whether you're going to go break higher, break short from the given area. So right now, we're at 150 is our area. So we either dig in and take the short or we wait and go long. Personally, you guys know me. You know how many times I've done this, probably 100,000 times at least, these Fibonacci retracements. And the reason why I do them every time is because they are very effective. This type of pullback right here, 149, what's the bottom of today's range? And 149.04, that's probably going to be legitimate downside support. If you wanted to wait for the golden zone, 148.07, yeah, probably. I could get into buying from this gap. I really could. Do I want to sell right now? I'm not interested. I'm not interested. The reason why is because we just don't know how high we're going to trend. And if 150 actually stands up as downside support, you're going to see this market move significantly higher in the coming sessions. That's a big move up. That's a big move up for the Japanese yen. It's something that, unless you were an insider, you may not have been able to even figure out. Right here, this is sort of the Reuters news feed. I cannot pronounce the names, so you're just going to have to bear with me. Takaichi. My apologies already. Set to become Japan's first female prime minister. What do we believe about any of that? It really doesn't matter. I mean, the bottom line is this. If you're going to be a prime minister or a leader or a president or a big-time leader in any one of these countries, odds are you're juiced in, you're well-connected. So I'm not necessarily concerned that this is a complete outsider that's coming into the mix without somebody knowing pretty much what the policies are going to be. I'm not really too concerned about the change in leadership. I thought that the assassination of Shinzo Abe a few years ago was a much bigger event because a lot of folks thought that Abe wasn't done with politics. That assassination, I thought, should have really shook the yen up, and it didn't really do a whole heck of a lot. This move today, you could probably say that, okay, is there some political uncertainty there? Potentially, but it's not because the new leader is a female. That's believe me, these folks at this level, they're all power players, they're all heavy hitters, and they're all juiced in. They've got big-time connections. My guess is that there's some sort of banking connection there, and the idea is that the yen is going to get back to that dirty float as soon as possible, and we've been talking about that for about a year. Get ready for rate cuts. Get ready for a negative deposit rate from the BOJ. To me, that's what the change in leadership would signal. So definitely want to start off there because that is the talk of the town, is the Japanese yen. It's good to see everybody back. Yes, sir. Good to see you. Yes, sir. Welcome. Blue Mango. Good to see you, Blue. Bruce Gordon. Hey, Shane. I hope you're well. I'm doing pretty well, Bruce. I'm confident you're doing well. We don't hope on this stream. I'm confident you're doing well. Confident you're doing well. And over in the How to Trade trading room, what do we have here? Tuku, good to see you. Tuku, Gordon Williams. Always a pleasure. Andrea Garwell, always a pleasure, Andrea. I think that we've got some interesting trades to go over. We had a few trade ideas. One was with the Kiwi. That was fantastic. We have a lot of people that are trading also the Kiwi. We have another Kiwi pair that's on the board here that we're going to start with. So we're actually going to start by looking at the Kiwi. Remember, if you want to trade any of these ideas, head on over to theswitchmarkets.com. Take a look at a trading account, and welcome to the Switch Markets community. We're still in the process of melding the How to Trade community with the Switch Markets community. The idea is to bring education and traders together. Everybody works together. Everybody makes money. That's the idea here. So if you have any questions at all, be sure to ask. That's what I'm here for. It's an interactive trading experience. If you have a question or a market you'd like me to look at, I'm more than happy to put my own personal lens on it. Or we could take one of our strategies that we've sort of developed over the last year or so and integrated those into the live trading. Also, tomorrow, we're going to have a live workshop. We're going to use Fibonacci time zones. I'm going to go over some Fibonacci time zone concepts and really dig into what those are and how they can help you maybe time reversals in the market. I think it's a fascinating tool because I always use Fibonacci's moving north and south. This time we're going to use them moving east and west. Ought to be an interesting type of I don't know, pretty good workshop. I'm looking forward to it. Got a lot of interest in Fibonacci time zones. We talked about them last week. Should be a lot of fun to do the workshop. Let me see. Yes, sir. Got to agree. I'm looking for a sell from the previous month's high. That's not a bad idea in the dollar yen. Andy Tong, good to see you, Andy. Welcome. Dave F19. Always welcome, Dave. All right, guys, so let's get on to the trade updates. Here's the first one, no NFP. This one was from Friday. We had the delayed NFP. It's scheduled for this Friday. We're going to talk more about our game planning for the rest of the week here in just a second. But I want to get right out to price because we did have some pretty good ideas. And we've got a level that's still in play in my view. I just don't think it's going to be in play. I mean, it's not. This market's not coming back. We really did time this pretty well. And if you want to go ahead and take a look at the chart, let's take a look at the chart. Now, we had an entry right here at 58.09. Which was just slightly above our 38% level at 58.08. Well, it depends on your broker. Right here, I'm looking at Awanda data. This low right down here was at about 58.10. So if you're trading on Awanda and you're waiting for 58.09s, you probably didn't get it. You probably missed the trade. But this was a relatively straightforward trade. We only had it down for a few pips, 20 pips or so. But it really was a pretty easy winner. You saw the price sort of retrace down to this neighborhood. On a daily time frame, probably a 3-point shade would have been a better idea. I just wanted to be very conservative because we sort of had that NFP, the number that never was, the number didn't come out. And so I was really concerned about our news cycle and what that could do potentially to the U.S. dollar. Now, for me, It was a pretty good trade. It was a pretty good trade. So one of the things about our key levels and our trade ideas is you can only be so fine with it. And we went with 58.09 there. But if you're your broker, probably, honestly, if you had a pending order on the board there, a limit order at 58.09, I would be shocked if it didn't get sucked up when the volume and the volatility hit right down at the bottom of the day's range, right around 58.10. Typically, most OTC markets, you're going to get filled up on something like that. But if you didn't get filled, you didn't get filled, and that's a big part of trading. You have to excuse me. It's extremely dry here. We had a big-time cold snap in Dillon, Montana. It actually went down into the 20s, 20 Fahrenheit last night, so we had a real heavy freeze, and what that freeze does, takes all the moisture out of the air. So you'll notice the voice is a little bit deeper, and I keep rubbing my nose because the air is so dry. But we'll get this taken care of. It'll just take me a day or two to get used to the new cold weather, but just a little change of wardrobe, maybe turn the heater on a little bit earlier in the day. But it's definitely a factor when you try to talk. That's for darn sure. Let me see Shahil and Lucy Patel. Good to see you. Hi, Shane. I'm new to the channel. So far, I'm enjoying it. I'm from Zimbabwe. When do trade ideas get sent to the emails that I sign up on the website? Thanks. Yeah. So when you get in there, Shahil and Lucy, when you get into the How to Trade trading room, what you're going to want to do, the howtotrade.com trading room, you go in there, you sign up, you get your free access to all the Trading Academy stuff. The trade ideas are posted in the trading room on the analytics thread. Okay, they're posted right there. I should probably just show you. But if you follow me at the top of the screen, you'll have an opportunity to get those sent out to your email. So essentially, there's several different ways to get the trade ideas. They're not signals. I get asked to provide signals. I actually was asked just last week to become a consultant for a commodity firm. I'm not really interested in it, in being a consultant, but undoubtedly they've been watching some of these streams and said, man, you guys have a pretty good idea about commodities. I said, I don't know. We hit every now and then. We've got a trade idea coming up for U.S. oil that ought to be interesting, that we're definitely going to be looking at here. So I'm going to go ahead and just show you exactly where to find these trade ideas. So this would be your How to Trade trading room. If you get in there, you've got trading competitions. You've got all sorts of things. Or your stream schedules right there. Right there on your left-hand column, market analysis. You're going to go ahead and give that a click. And we got to keep that live chat shut. But right here, this would be your trade idea. So everything would be this Kiwi trade would have been listed right in there. And if you wanted to follow me, just give me a click right up there. Click and follow, and you should be in great shape there. So that's pretty much how you use the How to Trade trade ideas, actionable trade ideas. I try to get out anywhere from 3 to 5 of those a week. Typically get a write-up every single day with some analytics, though. That's part of what we like to do at How to Trade, just to help where we can. That Kiwi trade, though, is a pretty darn solid one. That's for sure. Pretty solid. Okay, we have another trade update here that I do want to hit before we get into really the crux of the situation today, which we have some key markets we're going to look at on MT5. But U.S. oil. I've been bearish U.S. oil. No question about it. And we're sort of getting a lesson in how oil moves, definitely in the fall months. And we're going to pull up the daily chart with no indicators, and I'm going to sort of show you what the market structure is and looks like. This is a relatively straightforward trade for me. We're going to look to sell right in front of the daily 38% retracement. In my opinion, any reason to get short right now from a macro level is a pretty good idea. It's a pretty good idea. It's fall seasonality. This market is heavy. It's what we call heavy. And what I mean by that is, yeah, okay, we got a big bump today of about 1.4%. And in my view, you just knocked out a bunch of position shorts, which is how markets move. Let's go ahead. Let's get out to price action. So you see the daily. I mean, we went up there. We tested 66.50-ish, and then we've absolutely crashed. I mean, the last few days, you're trading 66.50. That closed right there on the 26th of September. That close right there was at 65.18, and now we're trading about 61.50. So just pull out the calculator, get a quick percentage on that. 65 minus 61 equals what? 4 divided by what? 61? What, about 6%, 7%, something like that? Nice 5-day losing streak. Nice doji. That's sort of that hammer formation, inverted hammer that we talk a little bit about. And then you got a break. So what's so significant about this breakout? Well, the big thing to remember is when you have a trend like this, and it's a pretty good daily trend, not too bad. When you have a trend like this, sellers are in complete control. That means position shorts are definitely involved in the market. So if you have position shorts, people that are sort of trying to ride, the 1 to 10, 1 to 20 X guys, the people that are all over YouTube, in the private jet, as soon as I got my risk versus rewards right, then I got this F5 or G5 private jet. I don't even know what they're called. My point is this: the folks that are swinging for the fences are probably still in these trades. Are those institutional people or are those retail? Remember, institutional play these things seasonally. They don't even look at charts. They say, okay, it's fall. Let's go ahead and sell some crude oil and see where we're at in November. That's essentially what a seasonal type of approach to crude oil trading would look like. For us retail traders, we don't have that kind of money. We don't have the 50 million or the 100 million to stick in the market and just ride these moves. We don't have it. What we do have is, 10,000, 5,000. Maybe we have a prop account. And a lot of folks on these CFDs will take these shorts and they'll be right. And they'll be absolutely crushing these trades. But what happens? Well, as soon as that symmetry breaks and you get a bullish day, you trade right above the previous day's high, market spikes, explodes, knocks a bunch of retail shorts out. Knocks them out. That would be what you'd call a symmetry play where the stop loss just is according to symmetry. It's a great trailing stop method. It just is pretty tough to execute on short time frames and be successful. Dailies, though, dailies are different. And you see right there probably was going to be your stop loss location. Sort of blew the top out of that. I guess, what would you call that, a short squeeze or a long squeeze? Honestly, the nomenclature these days, everybody's calling everything. What I think it is that's just a symmetry play, and that's where those stops were. As soon as the pain got bad enough, everybody just bailed out of the trade. Algos piled on, and then you had a little bit of a momentum spike there. Well, I want to capitalize on that. I still want to be short. And for me, if you were short right here and then the market blows up here, wouldn't you want to be maybe considering shorts from up here? I think it's a pretty good idea. So right now we're printing 61.52. The U.S. oil CFD is now tracking what the November WTI crude oil futures contract is tracking it very closely. November WTI crude's 61.53, U.S. oil 61.54, very tight. So we're tracking that with very little error, very little lag. That is a big-time indication to me that the volume is heavy on the November contract, and the CFD traders recognize that as well. Now, the beauty of this is this algo action, this momentum, this little pop, I would call that just a bump. This bump right here is going to give you a shot, hopefully, at 62.70 or 62.70. And I got to get hopefully out of my language. I know because it's such a positive word. You have hope and you feel good, and it's got positive connotations. Hope in trading can be deadly, and you can lose a lot of money sitting around hoping. We don't hope here. If price rallies to our level, we know exactly what to do. In my view, that's a pretty good area to be taking the short. That's for darn sure. So consider that as we roll deeper into the week. We do have some other things that we need to look at today, and one's going to be our psychology for Monday. I always like to cover these. I cover them almost every week, and the reason why is stay organized. I encourage all of you to stay organized in your brain. Be ready with your psychology for anything that comes your way. Stay organized. Don't become scatterbrained. Don't have, I got to do this, and this. Be organized. Monday, I know what I need to do on Monday to be successful. Number one, I want to trade to the positive. I don't want to go into a hole. Now, that doesn't mean I'm going to win 100% of the Mondays, but I guarantee you when I leave a Monday session, I am not going to be down big money. I'm not going to be sitting there at the end of Monday going, I got to work all week to try to get back what I lost on Monday. That doesn't happen. And the reason why is I won't let it happen. I'm interested in getting in here and game planning. I want to get my analytics down. I want to look at my key levels. I want to look at my markets and what exactly is going to move the markets this week. And I want to find my premium trades. I want to look for premium trade entries on a litany, just an absolute array of markets. And I want to be ready for as many eventualities as I possibly can be. That's what Monday is all about. It's about game planning. It's about starting the momentum. Now, the way that I approach trading is I'm looking to get paid every week. I play for money, cash. Not percentages. A lot of folks don't like that. They say, percentages. Well, this is a 4% trade, or this was a 10% trade. And I go, that's great. Good for you. I want to order my paycheck on Thursday afternoon, and I want to make sure that I have more money than what I started with on Monday. Well, the way that you can do that is make sure that you get that momentum going in a positive direction as many weeks as you can. As many weeks as you can. Get off on the right foot. Work on playing with a lead. If you guys are sports fans, whether it's, football, American football, I know you guys have soccer. You call it football, soccer in your country, or I call it soccer. So the difference is this, basketball, whatever. Play with a lead. The teams that are successful are the ones that are playing with a lead as many times as they possibly can. Learn to play with a lead. Get out in front. Trade with other people's money. Always make sure that you stay on the plus side of the ledger as much as possible. That's what Monday's all about. Don't go negative early unless you're going to sit there the rest of the week and you're going to be digging out of a hole trying to get even. And what happens is you get very, very tired putting in all this time and energy and never having anything to show for it. Stay ahead. Stay ahead of the game. And if you do that, you can really help yourself out in the long run. You really can. It's all about generating momentum and getting things going. The way to do that is to not take a big loss, game plan, and be ready. All right, week 41, 2025. This is a big one. This is a big week. U.S. T-bill auctions. We're going to talk about those in just a second. Tuesday's quiet. There's nothing really there. I think we're going to get a deal to reopen the government here in the next 48 hours. I would almost bet on it. Now, do we get it? I don't know that for sure. I don't have any friends in Washington, D.C. I don't know anything about it. But I will tell you this. I think we got a pretty good opportunity here to have NFP on Friday. Last Friday, they canceled NFP because the government was shut. I think it's going to reopen, and we're going to be in line to do NFP Friday. So Tuesday is going to be a quiet session. Wednesday, RBNZ, that's absolutely huge. We're actually going to preview the RBNZ a little bit tomorrow. Wednesday's RBNZ interest rates. That's why the Kiwis active EI inventories and FOMC minutes. We're going to be trading the FOMC minutes on Wednesday. That's a big-time stream. Be sure you tune in. I'm going to show you what to look for, tell you what to look for out of the release, and maybe point to some different areas, different levels that you could potentially trade after the release. Thursday, Jay Powell is scheduled to speak. We've also got the weekly jobless claims, which should be coming out if the government reopens. Now, if they don't reopen, then you're not going to get those numbers from the I believe it's the office, the unemployment office. I don't believe it's the Bureau of Labor Statistics, but I'm not 100% on that. It may be. But those weekly unemployment figures, a lot of folks are looking at that. They're getting in there and saying, okay, what kind of shape is the U.S. economy in? And those weekly employment figures are gaining more and more importance as people become more and more skeptical about the economic scene. Thursday, though, it's going to be Jay Powell speaking. I believe it's his biannual engagement with Congress. I'll look into it again, but with the government shutdown, all this stuff is subject to change. Friday's U.S. non-farm payrolls, it is penciled in for Friday, but the government has to reopen and give us the numbers. I'm very skeptical about trading this one, though. I have a feeling that everybody knows the numbers but us. I don't mean that as a conspiracy theorist. I'm just telling you what I think. I'm telling you that they know the numbers and we don't, and they've had an extra week to simmer. I don't know if they're going to be baked into the markets or not going into Friday, but I'm very skeptical about all of it. And you should be too. It's your money. We don't give our money away. We don't just donate our money. If the markets want our money, or if the other guy on the other side of the trade wants our money, they got to beat us out of it. Remember that. Hold on to it. Be tough. Be tough with your money. Don't just give it away and say, oh, I'm just taking risk today and it'll be okay. Make sure that everything you do is structured and make the market take it from you. Don't give it to it. Believe me. If you do that with that type of intensity and you're prepared and ready to go, you got a shot. You really got a shot. All right, let me see. Blue Mango. Shane, did you see the AMD chart today? I saw the headline. Blue. I mean, we could pull an AMD chart if you'd like. I'm thinking there's probably a gap involved because AMD was going to dive into the AI space. I'm going to write that down so I don't forget it, but definitely interesting. Okay, as far as our news events for today, nothing really. 3 and 6 month T-bill auctions. I pull these every week because they give us an idea of what the long-term investors believe is going to happen with interest rates. So right here you got 3.85 and then you got 3.86, so down a little bit. 6 month T-bill auction, 3.695, 3.715. I'm still seeing banks advertise 4.10 though, 4% for CDs, certificates of deposit. I've seen that on TV really all weekend. So I think that it's fantastic that these yields are coming down, but some of those bank yields are staying up. That shows us that there's a little bit of a liquidity crunch, that some banks need the money and they're willing to offer a premium over risk-free, which is unheard of. And if you don't understand how the bond market works, don't worry. It's a very difficult environment. It's very difficult to – you got to have a lot of money to make money trading bonds. Let's put it that way. You do have to have that. We got a few Forex pairs, though, I want to look at here. But from an honesty perspective, we expect rate cuts. We expect 2 more of them this year. And if the markets don't get them, there's going to be heck to pay. That's for sure. Let me see. They can have a no donation Friday. Well, the idea, yes, sir, is to roll into Friday. Already made our money. That's the idea. That way we don't have to sit around and really sweat the NFP. We can sit there and just watch what happens and feel good about it, no matter what happens. Daily chart right here. This is a pair that a lot of people are trading, and this is the Kiwi CAD. This is the New Zealand dollar against the Canadian dollar. And remember, with the Reserve Bank of New Zealand getting ready to act, we need to really understand what this means for us as traders and what we can potentially do to capitalize on any sort of action from the RBNZ. If we want to trade the Kiwi, I highly recommend taking your macro levels into account. I don't know about scalping the Kiwi today. I mean, I know it looks like a huge range, but it's not really that big. It's not really that big. So you've got a nice big bullish move. We could easily go Fibonacci retracement sequence off of this top and really look to play this pullback. Now, with the Kiwi, it's all about the RBNZ this week. If they raise rates, if they lower rates, then you're going to see volatility. If they do nothing, you're going to see volatility. But for the Canadian dollar, it's all about crude oil. And right now, crude oil was on a bit of a rally. Okay, so that should have helped the CAD. It didn't. It didn't. So what do we expect? What are the Canadian dollar traders really telling you right now? They expect crude oil to come off. Fall seasonality, guys. Understand your correlations. The Canadian dollar is a commodity dollar or a calm doll. All right? It's hooked. It's linked. It has a positive correlation with the performance of crude oil. As crude goes up, the Canadian gains strength. As crude oil goes down, the Canadian dollar loses strength. Going into fall seasonality, that's going to be a bearish market driver for the CAD. So if I was going to look to make a play here, I'd say, okay, well, we could certainly buy pullbacks. I mean, we could go Fibonacci's here all day long, and we could buy some pullbacks. I don't have a problem with that. The big thing is I don't think we're going to get a pullback just yet. So what I would be looking to do is maybe dial up a different time frame chart, and let's see if we can get just right here, object list, click, get rid of that Fibby, and go ahead and see where we're at. So what do we think's a viable trade on this monthly? Not a whole lot. Not a whole lot. Now, when we're looking for Fibonacci retracement sequences, you need a nice top there, and you've got a nice liquidity sweep there. The problem is if I run Fibonacci's from there to there, you're going to see just the absolute compression between, it looks like about 38 and 62%, 38 and 50%. I'm not interested in any of this. It's very, very choppy on this time frame. So what we have to do is we have to say, okay, do we have potentially a trade on maybe another strategy? We've got good short-term strength here on this Kiwi CAD. Let's go back over to TradingView. Let's see what we've got. We've got Bitcoin. This is our Bitcoin chart. We'll talk about that in a minute. This daily buy was money in the bank. It was absolutely just a beautiful thing here. 920 EMA crossover. We've been talking a lot about the 920 lately. This is a daily chart. Absolutely great look at Bitcoin. But let's go ahead and take a look at this NZDCAD. Okay, what do we have? Okay, you're working a sell. You're still working this sell. You haven't been knocked out of that yet, although we are starting to get skeptical. You had a bid right here. You sort of, you got a little bit of money there. Then you retraced. You pretty much got knocked out here on the sell, and then the sell sort of winding back. This is indicative of a rotational flat market. It's a flat market. So for me, I'm looking for what? I want a crossover. Let's go down to a 4-hour chart and see if we can take a position. Okay, right there was your 4-hour buy. Right there. Back on the 30th of September, October, it's been all bidders. The bidders have been in control of this market. So what do we want to do? I would say that we're too late to get in on the short time frames to the long. I probably would be looking at my daily saying, okay, if I get this crossover on the daily, this could potentially be one that we would take a shot on the long net a little bit later in the week. So if I'm looking at the Kiwi CAD, that's probably how I'm looking to trade it. I'm not really interested in going short. I'm not really interested in buying from here. The longer time frames, we're in deep rotation. And that is definitely trouble. Definitely trouble. All right, Euro USD. Let's take a look at the Euro USD here, and then I'll get on over Scotty T. Yeah, the Bitcoin USD. I'll look at that in a second. We already saw the 920 there crossover. Monthly chart right here. It's a little bit easier for us when it comes to the Euro USD. To me, this is a very, very simple way to look at this market. Monthly chart, spike low, spike high, Fibonacci retracement sequence. That's almost why you built Fibonacci retracements. Something like that. Now, this is one of the big problems that I have with MT5 is you don't have the ability really to toggle your screen like you do on TradingView and manipulate the chart so I can show you sort of with better granularity and detail what exactly I'm talking about. But that type of pullback right there, if in fact you do trade beneath last month's low, and it certainly is possible, and you get that pullback right down about 112.50, 112.60, that zone right in there is a pretty darn good long. So I would definitely be heads up on that if you do get the big pullback. Are you going to get it? You're 117. I mean, what are the odds of really getting that? They're not very good. But if we know where our big round numbers are, we probably have a trade idea ready to present itself. What's the biggest, roundest number for this market? No question. And you can't really draw very well on this MT5 either, but yeah, that's not going to work for us. Let's go back over to TradingView and have a look here. So if I was looking at your Euro USD market, what do you got right here? Daily chart, it's absolutely a mess. I would get out of that. I'd say, okay, what can we do strategically? I'd say, all right, let's go back to our monthly. It's going to look a lot like that MT5 we just had up. What do you got here? Spike low, spike high, spike low, spike high. Okay, so there's your pullback right around 112.50 roughly. Are you going to get that from 117? Not this week. Not likely. So what would we be looking to trade? 120. It's the biggest, roundest number out there. And I'm moving fast, but make sure that you dial these in absolutely as accurate as you can on your charts. There it is. So 120, right? It's going to be big resistance. More than likely, it's going to be an absolutely big-time zone where you're going to be saying, okay, 120? Yeah, 120, more than likely. Now, It's funny because you get these this type of stuff here, a nice big move that we saw back in 2021. You've sort of got this swing high, these spike highs up here. If we were going to maybe do a long-term macro Fibonacci, and I don't think I would trade these levels. I'm just curious of where 120 is with respect to our Fibonacci sequence. And you can see we're right at 78%, 117.50. All right, a lot of validity there. It's acting fairly well, holding up fairly well as topside resistance. What does that mean for 120? Not much. It means if we break that high, we're probably going to have a zone in here that we could potentially attack for a little bit of rotation. So I'm looking to sell 120. I'm a net seller from there. I think that's probably the way to approach this market, at least with a little bit of confidence. For the Euro USD. Now, if you wanted to trade right now today and you'd say, Shane, give me something on a short time frame, I'd say, I don't like any of it. You know, keep a look probably on this spike low right here, this swing low, 116.50-ish. Yeah, you probably could make a case that that's going to be an important level, but it's not even really, you know, I mean, what is it, last week's low? Probably, something like that. Keep an eye on it. I'm not too blown away with it. 116.50, though, as being monster support. I don't necessarily know that that's going to be the case. All right, so you definitely want to be there for the Euro USD. As far as what else we could be looking at here, Great Britain pound, Australian dollar, and then we'll look at Bitcoin, AMD, and gold and call it a day. As far as what we've got right here, Great Britain pound, Australian dollar, we're bouncing right off of that downside support, which is your 13-month EMA. I would be right there with bells on to 2031. I think that's a big-time zone. So if we do break beneath that, I would be ready. I would be ready for a little bit of action. If you break beneath that zone and trade beneath last month's low, which is right around 202.29, you probably are going to move considerably lower. So I would be watching this Great Britain pound Aussie. As far as, you know, the Aussie gold market is absolutely huge. Be sure you know exactly where gold is. As far as intraday trading, if I was trading this on an intraday time frame, I'd probably be pulling my hair out because not much is happening. But you got right there, spike high, spike low, and now we're just sort of compressed, moving sideways. So if you were potentially looking to trade, you know, a short time frame like the 4-hour chart, a compression type of a pattern, right there, you know, you're above 38%. Pretty good resistance for a while. Very tight range, though. 203.89, the back end of that Fibonacci golden zone. Probably a pretty good area to target to the short. I think you could probably get in there and maybe make a trade. Something to think about there. All right, guys, let's go ahead and hit up Bitcoin. We'll look at Bitcoin, AMD, and then gold. We'll close with gold, and that'll be a wrap. Bitcoin's a big deal. No question about it. We've really harped on and on and on about 125 being our destination. And how are we going to trade it after we break 125? We want to be long, believe it or not. Technically, when you break above a key level like this, you've got an opportunity really to ride a runner into the unknown. We just don't know how high Bitcoin's going to go. We knew that this double top was a pretty big deal, this area right in here. That's gone now. It's been a tremendous run going back to about the 26th of September. What's the next big round number up for debate? 125? It's history. We've traded it. I would say 127.5 would be the next level that I'm looking at. This could happen fast. This could happen very fast. And if it does happen fast, we got to be ready to trade it. But right here, something like this, do we want to buy it or sell it? I would be short-term aggressive. Dial that thing down to a 4-hour chart. I like the 4-hour chart for crypto as well. Sort of how I feel about the Forex and the gold markets. I think that can work for you. Pullback zone. So right here, what do you have? High, 125.725. What's the high of this bar? High, 125.899. We're pushing higher, guys. I wouldn't really look for any significant resistance until we get up there to 127.5. I want to be long. We want to be long, but it really depends on, you know, what exactly you're looking to get done. 125 was the destination. Another prima facie example of why everything is very, very important with the key levels. Right now, you've got things trending into the unknown. You really do have to understand that key levels are a big deal. If I was to come to you and you had a Bitcoin and I had a bunch of money and I said, okay, I'll buy your Bitcoin for $124,000. And you'd say, no, it's trading at 125 right now. Pay me market value or I don't want it. I'd say, okay, I'll buy it for 125.4. Okay, fine, you got me. Now, why would I do something like that? Two reasons. Number one, I could be looking for that quick $2,500 pop, expecting it in the next day, maybe even the next 18 hours, 24 hours. Or number two, I could be digging into that for the long haul, believing that Bitcoin is going to go to $500,000 or $1 million. Those would be the two reasons you really could do it. You're either going to trade it short term, or you're going to get in there and you're going to hold it for the big run up to $1 million, which most institutional people believe is going to happen. I'm not necessarily on that fence, but I can tell you what, once price starts making new highs every day, believe me, it wouldn't take long to be at 250,000. The distance between 125 and 250 is the same as the distance between 125 and 0. That second 125 will come a lot faster than the first one did. A lot faster. Think about that for a second. Bitcoin is no longer just this thing that nobody understands. Everybody's heard the term. Most people have an idea of what crypto is now. You don't really know how it works, but they know, oh, that's cryptocurrency. Everybody's sort of used to the idea. We're familiar with it now. What does that mean? It means that crypto is not going anywhere. You have a government that's going to be supportive of crypto at every turn. That's what the Trump administration pretty much planned. They want to be the world leader in crypto. Okay, well, whatever that means. Institutions, crypto custody, the big banks, they're going to be letting you deposit in cryptocurrency. They're going to be facilitating crypto transactions. Not fully online yet, but they've been cleared to do so by the SEC and some of the banking regulations. I don't believe it was the SEC. It wasn't the CFTC either. It was, it wasn't the FDIC. I don't remember, but it was somebody gave them the green light to start getting into the crypto custody business. So when you have that, then it's institutional. It means the sky's the limit. There's only 21 million Bitcoin. I believe we have 19 million, and you won't have the full 21 million due to the halving protocols and things until 2045. You could see a time when it's very, very difficult to get your hands on a Bitcoin, even a fraction of it. That scarcity will make it valuable, even though I don't understand if the institutions own all the Bitcoin, what they think they're going to do with them. Look at them, I guess. I don't know. But the second 125,000, it's going to come a lot faster than the first one did, believe me. So there's a lot going on with Bitcoin. I think that you probably want to be long, and we've been talking about that for a long time. So the thing of it is buying a pullback here. Is that an investment play? No, that's a trade. That's a trade. That's Bitcoin USD, Scotty, in my view. We could pull up the 920 crossover, but those trades are gone. They told you to get long a while ago. I believe we had a buy signal a few months back on the daily chart with the 920. So and the 4-hour blew up. We had that one late last week. So if you missed those, that's okay. You just wait. You wait for a pullback, wait for a little stagnation. And it looks to me like 125. We'll see if it's defended. I mean, if the bidders defend it, then that could be the new bottom in this market, and that's absolutely huge. Absolutely huge. Let me see. Gordon Williams, what do you know about the new Texas crypto? You know, Gordon, I don't know anything about it. I would love to see a list of the names that are behind it, though. I mean, is that a Jerry Jones thing? Is he gonna fund his next linebacker purchase with Texas crypto? Is he taking a page out of Trump's book and it's going to be the Dallas coin, Cowboy coin, or something? I don't know. I don't know who's behind it. I think that crypto is for people, older folks like me that have been in the markets a long time. Crypto still sort of baffles me the way that it functions. The young upstart kids, the young kids that have come in the market, like many of you that are watching this, you guys come in and you're already familiar. You've really grown up with cryptocurrency. See, I haven't. I had to sort of say, what? How is crypto ever going to be money? I don't understand. Well, it is money, and it's turning into something extremely valuable. Does it crash? People have been calling for the crypto crash for years. I don't think so. I think it's here to stay. I mean, there's no point fighting the trends. All right, guys. Gold. Fascinating chart we have right in gold. Well, let's see. That's the wrong chart for me. Let's go gold right here. Okay, so we've had a trade ID on the board for seemingly ever. What's today's high? Today's high is at 39.70. We're looking to sell 39.79s, or excuse me, 39.89s, and we're right in that neighborhood right now. We're trading right around 39.50. I mean, 4,000, we're going there. It's just a question of how we react at 4,000. These trends have been absolutely massive in Bitcoin and gold, even in stocks. Right now, we've got the NASDAQ just trading 25,000 very, very abruptly, just absolutely challenging that level. What happens at 25,000 for the NASDAQ? Probably is going to push higher. All these assets are pushing higher on the expectation of low interest rates. That'll fuel inflation, which will make all of these things more valuable than probably they are right now today. It's going to take more dollars to buy any of them. So the price goes up. That's all there is to it. 39.12, I would love a pullback from current levels and an opportunity to bid. I mean, take a look at what this is on the daily. This is a little bullish pennant right here. Boom, nice bullish run, a little bit of compression, then bang, we go high again. Why are we breaking high? A lot of folks say it's the government shutdown. A lot of folks believe it's all sorts of geopolitical unrest in the Russia-Ukraine situation, in the Venezuela situation. The United States has 4,500. I believe they have 4,500 troops that were moved into the Caribbean. They've also got F-35s flying sorties on the Venezuela border. Nobody knows what's going to happen. You've also got a tremendous amount of political unrest here in the United States. We've seen riots break out in Chicago and Portland. Pretty much every city you see unrest right now, and that's the ongoing struggle with the ICE departments and protesters. And, whatever side of this you're on, I mean, it doesn't matter to us. We're traders. We're watching the market. That would drive gold high. Political unrest, geopolitical, sure. Domestic unrest here in the United States, absolutely. Anything that could potentially upset the apple cart is a big deal. And a lot of folks believe that the government shutdown's playing into this. They believe that the riots are playing into this. I don't really know what's playing into it. I think that we have a dovish dollar. I think we have what feels like just an absolute powder keg here in the United States. That's what it feels like to me. I mean, just judging by what I've seen over the past 46 years of life, I can tell you the last 25 of it. I've sort of monitored this stuff relatively closely even before I was in the markets, and I haven't seen really much of what we're seeing now. This stuff sort of reminds you of 2020 now. So I don't really know what to say about it. It has to be figured into the gold market somewhere. You got to figure if you have big-time unrest, you're going to get a big rally out of gold. You're getting it. You're getting it. So 4,000, we're going to stick with our trade idea there. I'll probably be updating you on that tomorrow, but I have a lot of confidence in this one. If the market does break and blow past 4,000, that's life. That's the way that it is. That's absolutely the way that it is. Silver. We've talked a lot about silver. We're getting right up into that key level of 50 and that all-time high of 49.81. Watching silver closely as well. And then lastly, we were asked to look at a share of AMD stock, which has just absolutely exploded on the news that they are going to get into the chip space. That's big, isn't it? Okay, guys, here's our gap. Gap. Love it. The problem with an AMD, or at least if you're trading it in the United States as just a straight-up stock, very difficult to get access to short the market. You're going to have deep pockets. You're going to have an arrangement with your broker, and they're going to have to let you actually step up and short the market. In order to take a stock market short, you're essentially getting the loan from your broker. Your broker's going to front the action, and if that thing goes up for whatever reason, you're in trouble because you're leveraged out. So if you're going to be naked shorting this thing, they call it naked shorting. If you're going to naked short this thing in the United States, take care of yourself. Be careful. I'm pulling for you, but I really do believe, I mean, you say, Shane, what's a gap? That's a gap. I mean, we haven't traded these levels for a long time, and what key level did we skip? 200. That's monstrous. So this down in here, this area from Friday's close to today's open, that's not a gap. We just traded that last month, we just traded that in August. We are looking for this area right above this swing high, though, to fill in, and this gap right here will be somewhere right around 205 to about 185, 186. I would really be extremely confident that we trade right at 200. Probably later today, if I, unless we see another major bullish announcement or something. But take a look at your Fibonacci's from that spike low to that high, really a 2-day range. Pull back right there to 202. I mean, that's, if I was a buyer, if you wanted to buy AMD and you feel like you missed the boat, that's not a bad entry right at 200. A lot of folks are going to be buying blocks of shares at 200. I would almost guarantee you that. As far as 62%, 186, that's probably a smart, a more astute entry. But you got to be patient for it. There you go. That's a good look at AMD Blue. I mean, it's just an absolute explosion to the top side. What can you really say about it? I mean, it's fantastic. It looks to me like somebody made an absolute fortune over the weekend, picked up a bunch of AMD stock on Friday. Somebody knew. Probably Pelosi knew. People in Congress knew. Somebody got the tip. I didn't get it. I don't know if you guys got it. I didn't get it. But fantastic look at a market that it really is a true gap. I would fully anticipate this gap to get filled. I mean, remember the 3 rules of gap trading. Gaps get filled, and gaps get filled. So if that's my thinking, all right, if I believe that concept, and I've seen it a lot, you're probably going to trade down into this zone. So if I was confident that we were going to trade down into this zone, how would I trade AMD? I'd probably wait for a test somewhere down in this golden zone. I would wait for 200 to get some compression and then a break, and then we would take it right there, and then we would look for this market to trade back up to wherever we believe it's going to ultimately go. I mean, right here, remember, markets have memories, guys. No question about it. You got a swing high right there that developed back in the March of 2024, something right up around 122 or 227, excuse me. I mean, that shouldn't surprise anybody that you go right up to that all-time high on the announcement, 225. Now you're coming back down to 200. Key level. Why? Because nobody knows what the hell it's worth. So we're having an open debate right now. We're making a market. We're having an auction. The buyers are debating the sellers. We're all trying to figure out what a share of AMD is worth. For me, the real opportunity in situations like this, of course, listen, if you were holding AMD and you got that pop, yeah, you probably cash out and go buy a new house or something. You really do. As far as what can we do as traders right now, there's going to be a lot of people piling into this thing at 200. No question. Do we believe it can go higher? Absolutely. We're trading. We went up, tested that all-time high. We rejected it. Once that level's gone, we probably go to 250, 275, and 300. That's what I would say. Now, if you pull back here, do we have a tremendous advantage from 186, 187.50, maybe even 190? Yeah, you have a big advantage from buying 209s to 190. How big is it? It's about $19, something like that. So it's 19 or 209 or 19 divided by 209. Just a quick percentage for all those percentage traders out there. It's about 9%. So could you wait for a 10% pullback from current levels? Yeah. Why? Because it's there. Nobody's made the market in this area yet. If you're going to get a big sell-off, yeah, you could easily step up, buy this thing, position yourself for the intermediate term. Maybe you hold that thing going into next June or something. You know, the beauty of trading stocks just for cash is there's no rollover fees. There's none of it. You just buy it, you hold it. Is the dovish policy going to help? Yes. The rate cuts will help AMD, yes. Will the AI boom and all the data centers and everything that are being built really quickly right now help AMD? Yes. So the bullish market drivers are there. The table's set for a long-term play here where you're thinking 300, 350, 400. Do we need to buy it right now? That's sort of the question, guys. Do you buy it right now? Do you buy 200s? The 200 buys are probably going to get washed out, and you'll see a sell-off probably down to the bottom of that gap. But once we fill that gap in, could be pretty good stuff to the top side. It really could be. All right, guys, I'm going to go ahead and sign off today. I've been going a lot longer on these. We're going to be going into sort of a different phase here in the switch markets, how to trade community. We're going to be looking at a lot of different changes, not necessarily in the content per se, but the live streaming schedule. I've been going at this time for a long time, pretty consistently. We may be shaking that up in the coming weeks. We may be going earlier in the day, which would be more around that U.S. Open and sort of more in towards the latter part of the UK session. So we may be doing that as well. We're going to be doing a lot of other things that are being launched here in the next couple of months that are going to demand sort of a little bit different schedule on these live streams. But we're not there yet. We're probably going to be making those changes here in the next few weeks, though. So I will keep you posted. Remember, the stream schedule for these live streams is always posted in the howtotrade.com trading room. Go in there, check out the past stream schedule, and you can get up and running with the stream schedule for this week. We're going to be live pretty much at this time all this week except for Friday, and we're going to try to cover the NFP live again. But if NFP gets called up again, or gets called off again, then we're probably going to I'll do it later in the day or something. I don't know that we're going to get up and do what we did last Friday just because there wasn't really much action I didn't see. Isaac, good to see you, Isaac. Welcome. You're absolutely welcome, Blue Mango. All right, thanks, Gordon Williams. I sure appreciate it. If you have any questions at all, head on over to howtotrade.com. Send me a private message. I will get back to you, or if you have any comments or questions, you can always leave them beneath these live streams on the YouTube channels. I check those pretty regularly. Probably checking those a little bit later today. Also, if you're a Switch Markets customer and are signed up for our newsletter, you'll be getting that one tomorrow before the right around the UK Open. And that one is going to cover a couple of key markets. We're also going to talk about the government shutdown, what that has meant to trading. We'll probably factor in a few of these big movers and shakers. But I got to tell you, the longer I look at that gap in the AMD, that's not bad. I mean, if you could short it with a CFD, you might be able to make that one work too as well. But I like that bid from somewhere down around 186, maybe 180, 190. Can't be exact with this stuff, but maybe 190 or 187.50, something like that. You're absolutely welcome, Bryn. Good to see you, Tuku. All right, guys. I'm out for right now. I'll be back tomorrow. We will be doing the Tuesday strategy session, Fibonacci time zone. So if you're interested in that type of trading, go ahead and show up, and I will go through the Fibonacci time zone strategy, and maybe we'll put them on some live charts and place a few trades on compressed time frames. We'll see how it goes. All right, everybody, thanks for joining me. Have a fantastic trading day. Trade the action well, and we'll talk soon. See you.